will likely be lower probability or more difficult to navigate. Same thing with Tuesday, lower probability and difficult to navigate. Now Wednesday we do have 2 p.m. FOMC meeting minutes, which typically whenever this sort of news driver falls on a day, in specific FOMC meeting minutes, the morning session is generally very lackluster and low probability. So if you were to trade earlier on in the week, Tuesday would probably be your best bet. And then Thursday, we have CPI. So this is going to be the most volatile day out of the week, or one of the more volatile days out of the week, which will offer clarity to the weekly range. And then Friday, we have 8:30 a.m. news and 10 a.m. news. So Friday is more likely to be the best trading day of the week. Now, even though Thursday has a lot of volatility, it's not a day you necessarily want to trade. But if there is a Kraken correlation, or a daily TPD, a 4-hour TPD, or a true reversal intra-week that forms either Wednesday and sometimes Tuesday before the release of CPI, you can see CPI expand or distribute in that direction. So if you're able to trade, or not trade, but if you're able to identify a true reversal before the day of CPI or any very large news event, and you're able to get in the day before, that is whenever CPI or large news events are tradable. So you don't want to trade directly on the day of CPI 5 minutes before it releases. If you were to trade CPI, systematically, you would look to enter the day before, or sometimes the day before that. Now, looking at the lens of what we have outlined in regards to weekly halving, Monday, Tuesday, and Wednesday would be the first half. So we would look for the higher low of the week to form within this half right here. And then Thursday and Friday likely to be the second higher low of the week. So example, Monday, Tuesday, or Wednesday, we're looking for the low of the week. And then Thursday or Friday, we're looking for the high of the week, and vice versa. This week I don't really hold too much of an opinion. I need to see how Monday plays out before really gauging, if the first half should be the low of the week or if the first half should be high of the week, because last week we did that, where we said, okay, the first half should form the high of the week, second half should form the low of the week. Due to the fact that we had that really large expansion on Friday, and it's still expanding now at the Sunday Open, I need to see more information, and I will keep you guys updated with what I think is likely to occur. But we can expect Tuesday or Wednesday predominantly to form that higher low of the week, while Thursday or Friday is likely to form that higher low of the week, leaving Monday out. Now, looking at last week through the lens of a weekly halving, we can see that Monday was sort of an accumulation. So last week we said Monday, Tuesday, and Wednesday. That was likely to be the first half, while Thursday and Friday is the second half. So we wanted to see the high of the week form in the first half and the low of the week form in the second half. So whenever you can correctly identify a half, you can pinpoint which days or day in specific is likely to actually be the high or low of the week. Just like with pinpointing the high or low of the week normally, with which day has the most news drivers, whichever day has the most news drivers, or days have the most news drivers, that's typically where the high or low of the week will form within a half. So Monday was accumulation, since it had no news at all. Tuesday and Wednesday had red news folders, so we would see this as manipulation. And then Thursday and Friday, since that had news folders as well, we would see that as distribution, which is exactly what we got. So does that make sense for everybody? The only difficult part is identifying the halves and identifying which day or days within a half are likely to form the higher low of the week. Once you have that established, price becomes easy. Like you can see, we expected specifically Wednesday. In Tuesday's price action lecture, we said Wednesday should form the high of the week. So you can see, form the high of the week. And then Thursday and Friday, distribution. So now, looking at, and it's not on here for some reason, but there we go. So who remembers our Bitcoin analysis? And this will be targeted towards Q1 people. So who remembers what we wanted to see for Bitcoin and Ethereum? It's absolutely zero recollection. Lower prices, yes, but before lower prices, what do we want to see? A TPD. What time frame TPD? A monthly. What time frame are we looking at? The 1 minute. We're looking at the monthly time frame. What is this candle right here? Sorry, I saw it from the leak content. This is a TPD. Yes. This would be candle 1. And then this would be candle 2. This would be candle 3. Candle 1, candle 2, candle 3. Which one created the lower open? Ethereum. Which lows on Ethereum do we have outlined? These ones right here. So this is why Ethereum is dropping faster than Bitcoin is, and specifically going towards these lows right here. And we had these lows also highlighted for Bitcoin. I'm not sure if we'll reach them. It's still out there. But once Ethereum breaks below these lows right here, this is where a very, very big buying opportunity will form for crypto. So we can expect Ethereum to trade below these lows right here. And then once time is right, under these lows, this will be the draw on liquidity. But looking a little bit closer at this TPD that we wanted to see form right here. As you can see, this would be candle 1 and this would be candle 2. You can see candle 2 took the high of candle 1 on Bitcoin, while on Ethereum, candle 2 made a failure swing on candle 1. So this is a predefined SMT. When do you not expect candle 3 to run either above or below a high or a low? Whenever you have predefined SMT. So going from a monthly time frame chart to a weekly time frame chart, knowing that we were not expecting, due to the predefined SMT, not expecting Bitcoin to trade above this high right here. What do we have right here? Weekly time frame, reversion level. Candle 3's opening price, what does it do? Tag perfectly inside of that reversion level, downside ever since. While Ethereum does not tag into a reversion level, leaves it unfilled. So why would we expect Bitcoin to tag into that reversion level? And this, the asset, doesn't matter. This works on every single asset. every single time frame. But why would you expect Bitcoin to tag into a reversion level and for Ethereum to leave one unfilled or untagged? Because Ethereum is weaker, as well as the predefined SMT. Whenever you have predefined SMT, meaning an SMT between candle 1 and candle 2, that is whenever you're looking for the weakest asset to trade into a reversion level. And if you're a little bit more advanced, while that asset, the weaker asset, is trading inside of a reversion level, you can trade the weaker asset and crisscross PDRs. So while Bitcoin is tagging into the reversion level, that's whenever you're selling short on Ethereum, if it were another case like this. So for crypto analysis, I'll probably make a post about this because everybody's going crazy talking about the markets are crashing, Ethereum, Bitcoin, it's over. We saw this coming. So Ethereum, these lows. So you mean go short for ETH as price retraces into the reversion level on Bitcoin? Yes. Some of y'all are asking if this is a signal. I'm simply giving you my analysis. If you put risk behind a trade, regardless, if you make money, good job. If you lose money, it's on you. And again, if you make money, it's on you. If you lose money, it's on you. But looking back on index futures, and no, I'm not doing Forex analysis because I don't see anything clear for Forex at the moment. But for index futures, again, since we had this huge drop and Monday is continuing, we just opened for this weekly candle and we've already dropped on the NASDAQ 600 handles, which is absurd. Typically, whenever you see things like this, and don't try to bet on this or anything, some of you have seen me call this in the past, but typically whenever you see Sunday's opening price have a huge drop, the morning session has a tendency to retrace back within the range. So that's something to look out for. Again, don't bet on it. I'm not even doing anything Monday, waiting for Monday to play out so then we can gauge what the week is likely to do. In CPI weeks, all you're doing is looking for an intra-week Kraken correlation to try to gauge CPI. So that's all for price action right now. Does anybody or is everybody on the same page? All right, perfect. Now we can do some Q&A. How can you tell when a stop run has run its course while the other assets are creating a failure swing? Generally, well, I believe you're asking how to know whenever an SMT is likely to hold. If you don't have any narrative backing it up, or nothing in price action backing up an SMT that you're expecting to form, that's whenever you can use lower time frame TPDs to confirm SMTs. But if you're utilizing narrative, So let's say this is a TPD right here, if you are utilizing narrative. So this would be candle 2. The weakest asset is going to be, and this is how you see, this is how you're able to anticipate SMT before it even forms. Let's say this is a daily time frame TPD on Tuesday, and then Wednesday opens up. On Wednesday, on the weakest asset for the upside, if your narrative is bullish, you're looking for candle number 3 to run below the low of candle 2, creating an SMT before kicking off an expansion, while the other assets create a failure swing. This is the best case scenario what you're looking for, and this is how you're able to anticipate weekly cycle SMT with a daily time frame TPD. And then on those weaker assets, or the stronger assets I mean, the weakest asset is likely to run the low if you're bullish, while the stronger assets for the upside are likely to trade into a 4-hour reversion level. What do we do if the S&P and NASDAQ both make the TPD in the weaker side? There are other ways within them that you can compare. And we'll get more into that whenever it shows itself. There's no real good examples, because I hate looking at hindsight examples and showing hindsight examples. You'll get a far better learning experience if you see it outlined in front of you and then it pans out. But whenever price becomes a little bit clearer and more predictable, trust me, you'll get all the examples in the world of how to properly identify things like that. And we will get into it in the future. We just have to wait for price to tip its hand. As you guys know, we are not hindsight artists. In regards to the weekly halving theory, when would you expect it to be a 2-3? It's likely to be a 2-3 whenever Monday and Tuesday have heavy news, while the rest of the week lacks news. 90% of the time, the short-term reversion model is what produces the higher low of the week, correct? Yes. What do you qualify being far away from the weekly opening price, or is it just visual? What else could make us anticipate Friday retracing back into the range? Whenever you don't have things going on geopolitically. Let's see. I believe non-farm payroll is right here. If this were a regular trading week where there wasn't huge economic news having an influence on price, and it looked just like this with non-farm payroll Friday, I would consider this far away from the weekly range and expect price to return back from the range. But due to the fact that we had real world news and economic news, that's why I didn't respect any of that. And that comes into part of knowing time before price. If time isn't right, then price will not align. Meaning, if it's not high probability time, price action is likely to disrespect concepts. But for knowing whenever price is close to the weekly range, or not the weekly range, but the weekly open, this is what I consider close to the weekly open. But this down here is what I consider far away from the weekly open. That's not always the case when the stronger asset doesn't create a reversion level. I'm not sure what you're asking. Can you provide some examples on the narrative time frame 2 candle look back you introduced in your core content lecture? As I understand, this is used for anticipating reversals, but candle 2 is the scenario, is not a TPD. Whenever it forms, we'll have new examples. But Q1 people, what did I do with these two candles right here for gauging whether or not NASDAQ is likely to be stronger and deliver first? The distance, exactly. Q1 people, you guys saw me do it. That's an example right there. And now you're probably thinking, oh, it all makes sense now. But that's another example or a way to use that. I believe it might have been with these two candles. So with these candles right here, you guys can go rewatch it. But whenever it forms again, we'll have new examples for it, and it'll be a lot clearer. So for quarterly alignment, are we mainly doing daily PSP, weekly SMT? That is probably one of the highest probability and the most frequent reoccurring sequences that I've given out. I'm in Q2 on part 3 of the TPD. Should I watch all of those before joining the streams, or should it still be fine, just fill in the gaps later? You don't have to use everything I've given you. I set this up in a way to where you can pick and choose certain things. You're not supposed to use everything I'm giving you all once. You're not supposed to take everything into account. You can pick and choose certain things you like that resonate with you and just focus on those. Some of you are going to use the SMT skip. Some of you are going to use the sequential cycle SMT. Some of you are going to be continuation traders. Some of you are going to be reversal traders. You're given tools to fit your personality. You're not supposed to use everything. So yes, while you can watch every single lecture, and while I recommend you do, don't come in thinking that you have to bring everything together and every single concept has to be aligned. It doesn't. As you know, in the high probability setups video, all you really need is just two things at a specific time of day. And then once you have that, it's go time. When's that reversal lecture coming out? This weekend for the supplementary lecture to the reversal model sequences. Is there a resource where I can know what opens we are using for weekly and monthly, etc.? You just look at the specific time frame and then look at the opening price, if that's what you're talking about. So like this weekly opening price right now would be 17,100. The weekly opening price and the true week open are two different things. Two completely different things. The weekly opening price is the opening price of Sunday. The true week open is the opening price of Monday at 6 p.m. or the Tuesday daily candle open. Is it necessary to keep the weekly open in mind? If you stack the weekly open as well as the true week open, that is another way to gauge price, especially if you look at accumulation, manipulation, and distribution. When you mean need to wait for a specific time, do you mean 8:30 or 10 when news, and if 9:30 there are no news? Yes. What kind of crack would you like to see before the crypto market bounces back up? For best case scenario, something equal to or greater than what we have outlined. So we have a monthly cycle, or not a monthly cycle, a monthly time frame TPD with a doubled sequential SMT at the top with these two monthly time frame candles, as well as a reversion level within there. So we would need to see something equal to or greater than for price to turn. Can you clarify the 6 a.m. opening price for premium and discount? So generally you will use that on days of reversal. So intra-week reversal typically is the best time to use that. So the 6 a.m. opening price, if you combine that with the true day open, that is a stacked true open. And typically you'll find higher low of the day will form in conjunction with these prices or opening prices. So if you're bullish, then you want to see then you want to see a TPD or sequential SMT form below that 6 a.m. and true day open, and vice versa if you're bearish. So the only time you really would like to see this is on intra-week reversals, days you're expecting higher low of the week. Does that make sense? You're not going to see it form every single day, but high probability reversals will have the characteristic of dropping below the 6 a.m. opening price as well as the true day opening price, or forming that signature below these prices if you're bullish, above these prices if you're bearish. So why are you choosing the New York Open instead of the 6 a.m. stacked, or why are you not choosing the 90-minute cycle true open? What time frame is this right here that my mouse is hovering over? The 4 hour. Now it's on 6 hour. The 4 hour. What time do you generally look for trades? From what time? From 9 to 10:30 or 8:30 to 10. That 4 hour candle encapsulates 8:30 to 10 o'clock. So with that opening price, you have your open, your low, your high. You're encapsulating the low and then playing the expansion. So that's why I use the 6 a.m. opening price. Because you're looking at that 4 hour candle. If you can identify where the 6 a.m. 4 hour candle is likely to expand to, the work is over. Now it's just finding an entry. If you could tell yourself something whenever you first started trading, what would have helped you big time and what would it be? Get off of the 1 minute chart. Even get off the 5 minute chart. Study the weekly range. Get really good at identifying the weekly range. That's what I would tell myself. You'll become a lot profitable sooner If you truly understand narrative and truly understand market conditions and where the week is at and everything going on, if you can understand that, you're good. I wasted a year, an entire year on the 1 minute chart. And now the highest time frame y'all usually see me go to is like or the lowest time frame y'all usually see me go to is like the 15 minute. But if you can't identify the weekly range and you have no idea where price is going on the higher time frame, you're gonna be a bit lost. And you're just kind of gonna be, freestyling your way through the morning session. Whatever happens, happens. Which is not a good way to go about trading. Did you say interweek or intra-week? Intra-week. So within the week. I'm telling you, it's crazy seeing some of you guys type because I look at it and I'm like, wow, I remember, like, some of you guys are going through the same exact things I went through a couple years back. And it's crazy seeing that. It's like a reflection. But as long as you show up every day, as long as you fix the mistakes and don't continue repeating them, you'll be good. But it's going to take time. And it might take a little bit longer than what you would like it to. But you can't put a deadline on your success. That's just reality. As long as you show up every day, do what you're supposed to do, conduct your business, over time it'll make sense. And then you'll come to a point where you're like, you know what, I got this, I can do this consistently. And then from there, the sky's the limit. What was your first concept you learned when you started trading? I think it was like, it was either supply and demand or support and resistance. Yeah, they're pretty much the same, the same thing. It's like whatever, that was like a month in. Which one of your models works best for you? One of my personal favorites that I've given out is that exact short-term trading model for the reversal. That reversal model sequences, those two right there, intra-week. If I had one thing to just trade for the rest of my life, it'd be that. Specifically on the S&P. If I had one asset to trade in one model, it'd just be the S&P and that exact model right there. Did you ever want to quit when you started? There were times where, I mean, I never per se wanted to quit. I knew things would be difficult. Coming into this, I already knew this was going to be exceptionally difficult. I agreed to the terms and service that this was going to be really hard before I even really dove deep into it. So I already saw the things coming that I knew were likely to be there. So once they did form, or once they happened, I never per se wanted to quit. Now I did want to, like, be like, oh my goodness, this is like, just complain and be like, oh, this is the worst thing in the world. Why did I do this to myself? Da, da, da. But I knew there was going to eventually be an end to the light of the tunnel. And I expected there to be a lot of things I didn't want to happen that were going to happen regardless, trying to get to that point. So I never per se wanted to quit, but I did have some rough moments where like, oh, this is this is terrible. Now I'm at the point where I don't think I will ever quit. Unless I never, have to worry about money ever again. It's like it's like 30, if I ever get to like 30, 40 million liquid, that's whenever I'll probably, just retire. Never do anything ever again and just hang out. But until then, there's always more work to do. Are you referring your favorite as the 9 a.m. sweeping out the 8 a.m.? If the 8 a.m. candle is a TPD, if I'm intraday trading, that's one of my favorite models. Were there periods during the come up where you put gym on pause to focus more on trading? No. Whenever I was really, like, really serious about leveling up and trying to make everything work, I don't know how I did it. I was like 16, 17 years old, working 16 hours a day, every single day, 6 days a week, for like a year and a half straight. Balancing like four different things at one time. I don't know how I did it, but I pulled it off. I guess it's just something you're either born with or you're not. How you found, or how did you find Day before he opened up his mentorship? I saw Quarterly Theory on the original tweet before he even made a video about it. Back whenever he had like 17,000 followers on Twitter, I believe it was. And then I applied the things into the chart, and I've been trading Quarterly Theory ever since. So I'd been trading Quarterly Theory like 6 months before he even opened up anything. For candle closures on higher time frame, does it matter if one of the candles is a TPD? If the candle is a TPD, then it becomes easy, and you already know how to identify strength and weakness. If there's no TPD at all, that's whenever you focus on the candle closures from 2 candles back. We've already been going at this for 40 minutes. But I think we should go ahead and wrap it up here. So, is everybody caught up for what we'd like to see in price? All right, we're all on the same page. So, with that being said, hopefully you all found this one insightful. I will speak with you all again in the Tuesday price action review, and I'll probably do a small little update in the Watt page. In the meantime, once Monday closes. With that being said, hopefully you all found this one insightful. I'll speak with you all again soon. Good luck and good trading.